Hello, and welcome to the first installment of our new monthly investor update format. I'm Ralph Vanderwall, founder of WCMIF, and I'm thrilled to share how we've continued to turn economic headwinds into momentum. This last quarter, we closed out Beach House with recovered costs in hand, and we also refined our strategy for Portal, setting the stage for what I think will be our most exciting update yet. On top of that, our Build 44 multiplex infill plans are on track to deliver steady, repeatable returns. Between those two engines, we're well positioned for another phase of sustainable gains. I also have a very positive development to announce. Let's dive in. During construction of the Beach House at Saratoga, we encountered architectural issues with misdesigned fire codes. While it was quickly corrected, it led to delays and additional costs. As a result, we pursued damages against the architect, and we were recently awarded a reasonable settlement. As we had to sign an NDA, we cannot share the exact details of the settlement, but while it did reduce the overall net profits, we still came out with a very good profit margin. With that, the Beach House project is now officially closed out. When we set our July 2024 soft launch date, the outlook looked encouraging. Early in the year, most economists thought the Bank of Canada would start trimming rates by June, and many expected buyers who'd been waiting on the sidelines to jump back in once borrowing costs eased. Fast forward to launch day, the rate cuts hadn't materialized. The policy rate was still 5%, the cycle high, and inventory had ballooned to more than 14,000 listings, up almost 40% from the year before. With plenty of choice and expensive mortgages, buyers stayed cautious. The sales to active listings ratio slipped to about 17%, the lowest in 4 years, signaling a clear buyer's market. In short, what was expected to be a tailwind turned into a perfect storm of high rates and excess supply, slowing our initial pre-sales. After facing significant pre-sale challenges last summer, we paused to carefully reassess Portal's direction and uncovered a compelling opportunity, pivoting to a purpose-built rental project. Rental housing not only makes strong economic sense, given Maple Ridge's vacancy rates below 1% and a substantial government support, but also aligns with our ethical investing principles by helping address the region's housing affordability crisis. Importantly, our updated analysis confirms that this strategic shift positions Portal for outsized returns and accelerated timelines, exceeding even our original pre-sales projections. We're really excited about this approach and confident in the enhanced value it creates for our investors. Build 44 is now in force, opening every standard single-family lot in BC to 3 to 6 homes, and 6 where frequent transit service is nearby. We're reviewing a few parcels every week and expect to have 1 or 2 properties under contract before summer's end. These multiplex infills will become the fund's bread and butter projects that add much-needed missing middle housing, helping to ease Canada's supply crunch while remaining firmly in a risk-adjusted comfort zone. Each build typically runs 18 to 24-month cycle and underwrites at a 15 to 20% IRR, with a blend of speed, scale, and margin that delivers dependable income for investors while contributing tangible solutions to the housing crisis. Now, we saved the best for last, Portal. Following recent meetings with the City of Maple Ridge, we've confirmed the site is squarely within a transit-oriented development zone under Bill 47. Because it sits just 30 meters from Port Haney Station, the property is now eligible for a minimum of 12 stories. We've initiated a full redesign to capitalize on this, increasing our projected unit count from 36 to between 150 and 180 rental homes. This density uplift immediately increases the value of the land, potentially by 30 to up to 50%, and locks in value for our investors before construction even begins. We're in the early stages of feasibility and design refinement with the city, but the upside is clear. We're also requesting an updated appraisal reflecting the new development potential, with early estimates suggesting a rise in residual land value from just under currently $8 million to as high as $12 million. For existing unit holders, staying invested or increasing your position means direct participation in that added value. If you're interested in topping up your allocation, contact us. We'll walk you through the steps. So let's pull it all together. Beach House, a construction hiccup turned into a positive outcome, recovering additional funds and closing the chapter on a standout project. Portal, we strategically pivoted to purpose-built rental, unlocking stronger returns while contributing meaningfully to the housing affordability solution. With the recent Bill 47 designation, the site's development potential expanded dramatically from 36 to as many as 180 units. This density lift brings a significant increase in land value and adds even more upside for investors. In the pipeline, Bill 44's multiplex infills offer efficient, repeatable projects with attractive returns, bringing additional stability and growth to our fund. Together, these initiatives put the fund on solid footing for long-term, risk-adjusted performance. We're excited about what's ahead. If you'd like to revisit your capital allocation or explore increasing your position, please reach out. As always, thank you for your continued trust. We look forward to sharing more progress in our next update.